Hello and welcome to another update video about WTI. We take a look at the oil market today. And yeah, since the last update, it's been a while, but not much happened actually. We've basically just been moving sideways and the market is consolidating below the red trend line. I find that a very interesting and intriguing breakout setup for higher prices potentially in this third wave. The overall wave count hasn't changed. Still watching for a possible 5-wave move up here. The microstructure has been adjusted a little bit based on the size of, this consolidation. Because it is not, I believe this year, that kind of pullback consolidation is not part anymore of that circle wave A of wave 3. We've broken below the trend line, which was an initial signal that something more bearish is going on, maybe a pullback, a correction. But I have to highlight again that this trend line was not a clear one, not a reliable one. We had these two touch points here. I can take it off now. What we now need to be watching for are, I think, two scenarios. I've got two scenarios for you. Idea is still that we are here in a third wave, which is part of a larger diagonal pattern. So the third wave is an A, B, C structure. Given that this here could now be a B-wave pullback, we can already add a not micro support, just a main support region here to the chart, which could be tested. It's between $74.91. And I will take the yellow box off the chart. Let's just focus on what we have here right now. Between $74.91 and $79.74. And my preferred interpretation would be that this B-wave is still unfolding. How is the micro count looking like? So based on this wave count, best interpretation I can offer, and there are a few, but the best one would be A wave, B wave, C wave. So that we're now working on wave C of the larger B wave. And that this here is some kind of a flat correction, maybe a running flat, in which we've now started wave C to the downside. Okay, what would be a key target zone? I mean, we have the main support area, but if we take the length of this A wave down, we go to the high of the B wave, then the levels that we're normally watching for are the 100% extension, 123.6, 161.8, and 138. And then this gives us a clear target zone for wave C of B. And it would be between $80 and $77.89, with additional levels here, $79.26 and $78.74. This would be the preferred scenario. To keep this scenario alive, the price should now stay below the last high at $83.75 or $83.80, and continue to show us some more downside. Now, in an alternative interpretation, we've already bottomed here in wave B. We had an A, B, C in wave B, and the B wave bottomed here already, but it would be an extremely shallow B wave. And this would then be a 1-2 setup. And we would ideally need to hold, but this is not preferred. Still though, that's my opinion, okay? And therefore I don't prefer it for various reasons, because the wave count just, it doesn't adhere so much to the, not to most Elliott wave guidelines, whereas the one I showed you first, I find fits a bit better. But anyway, that's just to a degree subjectivity as well. You can always watch the Fibs. I mean, from a Fibonacci point of view, as long as we're holding $81, here a more bullish outcome, a direct upward move in a 1, 2, 3, 4, 5 is possible, just not preferred. And then you could use also the trend line as a possible trigger. Yeah, that's the update about oil, WTI. Hope you enjoyed the update. If you did, please hit the like button, leave a comment, and also subscribe to the channel. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.